I think this is lecture 5 now on this resident finance series. So thank you guys for always sitting through these. So imagine me, PGY1 or whatever. I'm crossing the street. Actually, no, PGY4 now. Crossing the street. It's like 3 a.m. in the morning. I'm tired. I need a like a bacon, egg, and cheese from the deli or something. When unfortunately I am struck by a car that ran a red light. All right, I'm brought to CCT, and thankfully here I am smiling because one, am alive, 2, I'm being treated by Dr. Solger, and 3, I likely have a concussion. But my hand, as a left-handed person, this is what it looks like. I have fractures all over the place. And even though I go through a lot of physical therapy, I no longer am able to have the dexterity to do things like intubations or central lines. And so I am graduating soon. And if I only have group disability insurance, this is going to fall off once I graduate. And if I'm able to do any job, it turns out that your group disability insurance won't pay you anything. So I have all of these things that I have to pay for in the future. Ring, student loans, future house, future car. And I have no plan anymore. And this is what I'm stuck with graduating after this disability. And so that's the point of today's lecture. Disability insurance and emergency funds. You have to protect your future because you never really know. All right. So thankfully, our job, in EM, it's pretty recession proof. As long as people are sick, they will be coming to the emergency department. And as long as we're willing to show up, we will have a job. Really, the thing that is going to prevent us from making enough money in our careers to meet our retirement, a lot of people, it's going to be burnout. So most of our job is just protecting ourselves until we can really complete the amount of years we want to do. But we also have to point out that our job is very physically oriented. We have to move around constantly. We are squatting next to chairs on every shift, pretty much. And we have to do things that require a lot of dexterity. So intubation, central lines, God forbid, a thoracotomy. If you are no longer able to do these things, you really can't do the job of an emergency medicine physician. And so that is where disability insurance comes into play. Statistically, somewhere around like 1 in 7 of us in our career are going to go on disability for some period of time. All right, so kind of keep that in mind. Statistically, you are unlikely to be that 1 in 7, but it is a possibility. And so just to explain how disability insurance actually works. So you agree to pay a certain amount of money, either yearly or monthly, to one of these like generally 5 companies that offer policies. And in return, if you happen to get injured, they agree to pay you a certain amount of money per month. And that is the whole idea of it up until the age of about 65 when these policies fall off. So there's really 2 types here. There's group disability insurance and individual. So what group is this is disability insurance that you're automatically given pretty much at any job that you're at. So currently right now we have group disability insurance. If you're at county, you get it through CIR, through a guardian. If you're at downstate, you get it through the standard at UUP. When you start your new job as a physician, you will also get group disability insurance for the most part through your employer. Sometimes through some of these organizations like the AMA, et cetera. But this is what group means. The pros of this is that usually your employer pays a premium, so that's nice. And anything is better than nothing, to be honest. So having no disability insurance sounds terrible. So at least you have something, but it's a weak definition of disability, and we're going to talk about this. It's not portable, meaning that when you move or leave your job, this does not follow, it falls off. And it's a limited amount of coverage. So just to point out what they describe as a definition of disability, these are both of the policies currently for here and across the street. As you can see, if you're able to do any job for any amount of money, you're not considered disabled. So you will not get the policy. And the downstate one says that if you can do any job, you're reasonably qualified by education, training, or experience, then they also won't cover. We are one of the more kind of educated people in the world, so you will not be covered. And especially if you are at like here, county will take care of you because we're a residency. But once you get to your job, they're going to tell you to kick rocks. So what if you actually want disability insurance to really pay for you if you actually get injured? This is where individual insurance comes into play. So the pros of this is that you get a stronger definition of disability. It's customizable with riders that we're going to talk about. You can get more coverage with this, and it's portable. So you get it now, you can take this with you wherever job you go. The cons is that it's another expense that you have to kind of budget in. you may have exclusions from underwriting that we're going to talk about as well. So first thing, the customizations. These are the riders. When you get your own individual disability policy, these are the things you want to see. A white coat investor gives an example of kind of the things that you generally want to have. We're going to talk about these in particular. So own occupation. When you get this rider, this says that if you're not able to do your job as a physician, but you're able to do something else, then they will pay you. And most of these policies also have something called specialty specific coverage, meaning that if you can't do your job as an emergency physician, but you can go back and become like a radiologist, you will be paid both as a radiologist and from your disability insurance. Okay, so this is that's the stronger definition of disability that we're talking about. Next is a guaranteed renewable. What this means is that the company is allowed to raise your premiums every year, but only if they raise the premiums for everyone else on this policy. So if they have a lot of physicians on this policy and they raise the rates like crazy, everyone's going to be angry about that. So this kind of keeps the numbers low. And non-cancelable. So this is really the important one. As long as you make your payments, they cannot cancel your policy. Whereas if it doesn't have this and you get disabled, they'll pay you for a year, but then when your contract is re-up the next year, they will cancel you. So that's why you need the non-cancelable. And lastly, partial disability. So if you have like a back injury where you can still work but can't work as much, you can at least get paid that extra money on top of it. And then lastly, something called a benefit increase. So this allows you to buy your coverage now as a resident, where we don't need really more than like $5,000 a month or even lower. You get to then increase that amount of coverage when you're an attending, when you're covering a lot more of your income. And you can do this without going through underwriting again. So that brings us to underwriting. This is essentially your disability insurance policy and the people there trying to decide whether they should cover you, how much they should cover you, and what they should exclude based on your past medical history. So what this means is that if you've had mental health issues, or if you've had a pregnancy that was not the most uncomplicated pregnancy of all time, or if you have pre-existing conditions, they are going to try to exclude these and exclude covering you for these. So for things like mental health, unfortunately, this is like a big issue in emergency medicine. Most of the policies will not cover more than 2 years cumulative worth of missed time for mental health issues. All right, so you got to kind of keep that in mind. Lastly, pre-existing conditions. So if you've had back issues before, or you have joint problems, or if you have been prescribing yourself or other people medications that are more than just like a Z-Pak or some Zofran, that's going to be caught in the underwriting, and they may decline you, or they may say, I'm not covering any kind of like joint related problems in the future if you go on disability because of that. If you have risky hobbies like rock climbing or flying planes, they will also figure that out, and they will say, we will not cover you if you're injured doing these things. All right, and for women in particular, this is really unfortunate. On average, you pay about 50% more premiums per month compared to men. Now, the reasoning is that supposedly women on average go on disability more often and stay on it longer, as well as the pregnancy complications are kind of close to 1 in 4. It's kind of messed up, but that is the kind of reality of the situation. And as we mentioned before, unless you have had the most uncomplicated pregnancy, they will then in the underwriting process say, okay, I'm not covering any pregnancy-related complications going forward, which is the argument for getting disability insurance before you get pregnant. And just to talk about the underwriting process, 50% of all policies are either denied or modified. So for me, when I applied at the end of medical school, I had back problems in college, and I went to a physician a few times. Nothing horrible. I've never had to miss like work for this, but I had that modified in my coverage. I have a lower back pain thing that they will not cover if I miss work because of it. So what if we could just avoid the underwriting process altogether? So you can. This is something called GSI policies, or guaranteed standard issue. What this means is that you can apply for disability insurance without having to do the underwriting process. So if you have a pre-existing condition, or if you've been pregnant before and had complications, this will not get caught up and you will be covered for these things. Having said that, the mental health stuff still is about 2 years, so there's really no way around that. They have the same writers as your own individual policies, which is great. They generally cap at around 15,000 a month, which kind of over your career, I think gets close to like 180,000 a year. So you can't cover more income than that, but that's still pretty good. There is a rule though related to GSI though. So if you apply to one of the individual policies first, and you were either declined or had a modified or a modification, then you can't go back and do the GSI. So generally you want to apply for a GSI first if you have the option. So GSI policies aren't at every residency. We just happen to have one here, which is great. So really consider applying for this one first. We have Guardian as well, which also is really nice in that if you applied for disability insurance within the first 9 months of residency and you had either a modification or declined or whatever, they actually will allow you to get on the Guardian one as well. And the last question, when should you apply for disability insurance? So the real answer is when you are healthy, which is about now. If you want something like a guidepost, get it before you graduate, honestly. It's probably the best that you can do. So go back to me. These are the things that I need to cover after I got injured. I didn't have disability insurance. But now let's say I do have disability insurance. The issue is that it kicks in after 3 months, meaning that for the first 3 months, you need to cover for 3 months worth of expenses. All right, so how do you go about doing that? And that is where your emergency fund kind of comes into play. So emergency fund not only can kind of cover you during that time, but also if you got a car accident or your animal got sick or your washer broke down, you really need to have some money to like come back on during this time, unless you can borrow money from your parents or something, which is not an option for everyone. So how much should you save? It's probably not that feasible as a resident to save more than 1 month's worth of expenses. Whereas an attending, this is where you really want to go around like that 4-month period so that you can cover your whole disability period. And generally, this is going to include your rent, your utilities, and food, kind of things that you can't really skimp out on. But this is kind of the bare minimum that you need saved. The idea is that you want to do this as early as possible. Really in your PGY1 year, build up. It's probably not possible to save $2,000 in your first paycheck, so you got to just slowly do this. And then hopefully you then never have to touch this money the rest of your residency. That's the idea. So where should you put this money? You want it in places where you can have easy access to it so you can get it immediately when you need it. You want to have no fees when you pull out that money. And you want your money making money. These are some horrible options for you to put your money in, your wallet, your mattress, a checking account. Does anyone know why these are terrible options? Yeah, so particularly you are fighting against inflation, which is the idea that the cost of goods kind of is going up over time, meaning that if your money is not making you money, you are actively kind of losing value in that money. So not only is it hidden from you and you're not making any money on it, it's actually losing value, which is hilarious. These are some better options. Maybe these don't really mean anything to you. The easiest one here is probably just a high yield savings account. But things like short-term or municipal bonds can give you some tax benefits as well. No penalty certificates of deposits usually give you some good interest rates. You can get interest rates around 3.5 to 5%. My high yield savings account has recently been dropping from like 4.5. Now it's like 3.7 or something. This has to do with kind of the interest rates in the economy. It's a little too complicated for me. But usually you can make around $90 to $150 a year based on just interest, which is not a ton of money, but that's also at least you're not losing money. So these are the general options you want to just stick that money in. So lastly, what does this mean for me as a resident right now? Especially for disability insurance, you already have group coverage, but we talked about the language is terrible. It's trash. There are individual policies that you can apply for, and generally it's these 5 here, but you have to go through underwriting. So if you have any of these pre-existing conditions, expect to get a modification. But lastly, we actually have 2 GSI policies here. One is through CIR, which I don't really know too much about, but it is there. The other one is the Guardian one that we're going to have a talk on later today, right after conference. So the pros of this Guardian one, as we talked about, there's no underwriting. You get a 20% discount over the life of the policy, which is nice. So it ends up being, I think, like $80, $90 a month for a premium as a male. It's going to be more as a female, unfortunately. Has great language, especially for disability. You can do the riders and it's portable. The cons, as we talked about, there's a cap. As with all the other disability insurance, it has a 24 months total for mental health issues, and it is gender specific, which we'll talk about in a little bit. Unfortunately, I have no conflicts of interest here. So when Mr. Weber comes and gives us his stock on the GSI, I don't make any money on this. I wish I did. So really my interests are your guys' interests. So just a quick checklist for emergency fund, build up a month, put in one of the better options and just leave it alone. If you have any extra money and you want to put more money into your emergency fund, it's probably not worth it. Just vacation, buy coffee, invest that money instead. For disability insurance, get your health in order. So if you're in the middle of a workup right now for some kind of like unidentified issue, you really want to finish that workup first and prove to them that like you are consistently following up with your doctor, or else that is going to get excluded. Know your group policy and look at the definition of disability. If it's horrible, then you really should get an individual. Make sure that you get the riders that we talked about. And then decide if the underwriting is going to be an issue for you and maybe consider the GSI. And then for women in particular, strongly consider the GSI policy, especially if you've been pregnant before. In residency, you want to choose something called graded premiums. And then as an attending, you want to switch to level. And what this means is that when you choose graded, you agree to pay a lower amount in your like first few years. So during residency, that brings it to a very reasonable, manageable number. If you only stayed on graded though, then it would become very, very expensive as you got later towards your retirement age. So then as you're an attending, then you want to switch to the level so that it's just a straight line across afterwards. All right, so that's how you keep it reasonably affordable during residency and then lock it in later as an attending. So coming back to me, now I have disability insurance. I have an emergency fund that's kind of covering me for those first 3 months until my Mass Mutual policy kicked in, giving me $15,000 a month. Great. I had to hang up the white coat, which is sad, but thankfully at least all of my expenses were covered for and I could begin this new stage of my life however I wanted. All right, so to sum it up, you never know. And statistically, this won't happen to you, but if you're the one that it does, you really need to have your future protected. And the way that you're going to do that is by having an emergency fund ready and a disability insurance that has good language that will cover you. And lastly, really consider this GSI plan. It's a good policy, and it's something that not every place has access to.